Oh, welcome. So we see here our Christmas decorations, our Krampus decorations are up. If you've been riding around town, you may have noticed, winter solstice, Hanukkah, Kwanzaa, all that stuff. So what does it really mean to you? Well, it means it's tax planning time. It's year-end tax planning time. So I'm David Huff. I'm the founder and owner here of DW Huff Consulting, where we help small business owners build, grow, and enjoy their wealth. Well, what can I say about 2020? It's been a rough year. I think this COVID virus has definitely wreaked havoc on everybody, both their health and financially. And at least here in the New Orleans area, it's looking like 2021 is going to continue to suck. We just recently saw a bunch of news about Mardi Gras parades being canceled, most of the events associated with Mardi Gras being canceled. So, at least here, as well as everywhere else, looks like it's going to continue to be a little bit rough. So, I guess to avoid having 2021 be any worse than it has to be, we want to take advantage of some of these tax planning opportunities that have been provided by the CARES Act and some other legislation that are related to provide some relief to all this COVID devastation. All right, so we broke down the benefits that are available to you in a couple of categories. We have our new stuff and our old stuff. All right, so the new stuff that is as a part of these CARES Act provisions, one of the most common ones I think a lot of people are going to be able to utilize is the retirement plan distribution benefits. Now, if you take a withdrawal from an IRA or a 401k and you're younger than 59 and a half years old, you're no longer going to be subject to that 10% penalty. So that early withdrawal penalty has been taken off the table for a while. Another big benefit is that if you take one of these distributions out that's a qualified retirement plan distribution, the tax is spread over 3 years. So now, if you need money from a retirement plan to kind of make it through the year, at least you know you're not going to be getting hit with a big tax bill in 2021. That's going to be spread out, not penalized, and so more of that money will make it into your whole household finances. Another relatively new benefit is they've loosened up the rules on charitable contributions. So the way it was prior to the CARES Act, if you were not an itemized deduction filer on your tax return, you can make charitable contributions and not see any tax benefit. For next year, up for individuals at least, $300 will be treated as an above-the-line deduction, so you will see a benefit from, it's a small benefit, but at least you'll get a benefit without having to itemize. The other relatively big thing is that if you are operating as a C corporation, so it used to be the charitable deductions were limited to 10% of your gross income. They've now made that a little bit better, and that limitation is now 25%. So you have that. For a few of us that are operating as C corps, there's a little bit bigger benefit there. I guess the only thing to keep in mind here too is that on the retirement plan contribution we talked about a second ago, there is a $100,000 maximum, so don't go above 100 if you plan to utilize those tax savings. But the big benefit is this NOL carryback. So this affects the 2018, 2019, and 2020 tax years. So if you are a business who was making money and your business was doing well and you were paying taxes in prior years, if you ended up having a loss in 2018 or 2019, we can now carry those losses back and have some of those taxes from prior periods refunded to you now. So that's a pretty big deal. Prior to this, those losses can only be carried forward, so you get no current benefit from losing money. Now we get to carry things back and recover some taxes that were paid in prior years. It also affects the 2020 year. So if this year was rough for you with all the economic slowdown, you definitely want to consider filing a tax return as soon as you can when 2020 ends, because you'll be able to carry that 2020 loss back 5 years and get some money into your account within the early part of the year. Okay, and that was just a recap of some of the new stuff. But we also have our regular old things that we do every year for tax planning. One of the most commonly used techniques is look at if your business is about to make any large capital improvements, big equipment purchases in the upcoming year, we always look at accelerating those things into the current year because there's a lot of times those big pieces of equipment will generate some large write-offs, right? So we do want to continue to look at that. We want to be careful not to purchase inventory, however. A lot of small business owners sometimes get carried away with this type of tax planning and kind of letting the tax tail wag the dog, and they will buy a lot of stuff and end up kind of wiping out their checking account balance, but they'll also make a mistake and buy inventory. So remember, inventory is not an expense. So we have to make sure it's the right type of asset that you're purchasing. And typically that's going to be some equipment or a truck or something of that nature. That's going to be a big ticket item that you might be able to finance and not have a large cash outflow taking place, but a big depreciation deduction. So always going to look at that. Additionally, we want to look at bonuses for year end. So if it's possible, if you made money and it's also a situation where you could have had a good year and maybe didn't pay enough in over the course of the year with estimated tax payments, or maybe your payroll is a little bit low, now's the time to do a year-end tax projection and do a bonus check, try and get some extra, allocate some more of the tax withholding to the federal and state taxes to avoid any underpayment taxes when the return actually gets filed into next year. So I'll always take a look at that. And of course, as always, retirement plan. So it's not too late to do a SEP IRA or even a 401k. It's not, we have enough time to implement one of those things. So if the company's business is had a good year and we have some cash that's available, we can set up one of these retirement plans and make some of the retirement plan contributions, and that's usually a pretty big tax savings, and that's a good way to do things. So so with that, merry 2020 tax filing, tax planning season here. We're going to have a link below to a page on a website that's going to have a form. So if any of these tax savings opportunities look like they're might be helpful to you, you can fill out the little questionnaire. It'll email back to us automatically, and we will review it in a little more detail and determine kind of the nitty-gritty and the details of whether if any of these provisions will help you. So, thank you.